Welcome to the B20 Finance and Infrastructure Task Force Blended Finance Seminar and Knowledge Exchange.
Infrastructure is a big enabler for the development of human beings.
And that's the second part that I'll mention later on this presentation.
Good morning, everyone.
So the key takeaway I'm seeing is very strong alignment between international institutions and the government of Indonesia on the need for blended finance for infrastructure development here in this country. In terms of what blended finance can do to bring impact to improving access to affordable and suitable sources of infrastructure, clearly there is a lot of risk perception that needs to be dealt with, and that is something that blended finance is very good at tackling. It also can reduce the overall cost of capital for essential pieces of infrastructure and move those forward faster.
I would say there's great momentum around blended finance in Indonesia, but there's still three pieces that need a bit of work. First of all, convening both the philanthropic, the public, and the private sector to come together. Two, capacity building. Every sector needs to understand what blended finance is and how to do it. And there needs to be a lot of coordination, particularly on the public sector side. And then maybe lastly, importantly, I think there's a beginning of mobilization of domestic private sector financial resources, but we need to see much more of it. You can't expect international private sector capital to come in if the domestic private sector capital is staying away from the table. So that's also very important as a prerequisite.
Blended finance is a very important tool to enable the development of infrastructure in the country, and it can also help mobilize a lot more capital into infrastructure in the country.
So how do we think blended finance can really bring impact to improving access to affordable and suitable sources of financing for infrastructure, particularly in Indonesia? The infrastructure financing gap in Indonesia is still large, as it is elsewhere in emerging markets. Blended finance, in its simplest form, helps to change the risk-return profile of deals such that it becomes more suitable to invest in by private sector capital. And when we manage to do blended finance well, we do see private sector capital to come in at scale, and that of course will boost the infrastructure agenda in Indonesia really in a very major way.
Yes, blended finance in form of concessionality, either in pricing and structure concessionality, as well as in form of mobilizing institutional investor. It is a very important tool to enable those projects in Indonesia, in particular in infrastructure. A lot of these projects are difficult for a lot of investors that come to Indonesia because of the risk as well as the uncertainty of the country as well. So blended finance help the investor to mitigate some of this risk and allow them to come. And blended finance can also mobilize a lot more institutional money to come to Indonesia with risk mitigation tool that is blended finance provide.
And finally, I think blended finance has an enormous overlap with climate finance. So when it comes to renewables and other parts of the climate finance picture, blended finance has some significant things that it can offer. So those would be just some takeaways for me.